Good morning, guys. How'd that work?
I don't know. It's better than it's a good first try, right?
Yeah.
Good mortgage, good mortgage. Good morning from Mortgage Pros 411. I'm Audrey Boyce-Snow, my co-host Kevin Casey, and we have Tricia James, Regional Sales Manager from Greenbox Loans, but so much more. So before we dive into that, which it'll be an adventure, people, you have a lot to look forward to. We just want to talk about some upcoming things, starting with this afternoon. So we'll be popping into Originator Connect in Oakland and then helping Dave Luna teach NMLS tomorrow morning, or tomorrow, not tomorrow morning, all day tomorrow, apparently. So we've had a few people ask if we'd be there. The answer is mostly yes. And then we have, Kevin, where are we going to be? You said on Friday.
Thursday is Silicon Valley Camp.
There you go.
I believe that's in Campbell at the Campbell Community Center.
Okay.
And then on the 24th, we're in Sausalito, our class.
I love that class. We're at the Sausalito Yacht Club, and the view there is, oh my God. If you hate the content, you'll love the visuals. So join us if you can. And then on October 13th and November 17th, I'll be doing online for NMLS for SOLA OC camp. So if you need your NMLS to finish your NMLS, good God, join us for God's sake. Get it done. Don't wait till last minute. I'm curious to see what the current numbers are. It was a week ago that only
so a week ago, I reported that only 30% of people had, less than 30% had done their NMLS. Less than 30%. And people read it the other way around, that we were down 30%. No, we're down more than 70% of loan officers renewing their licenses. That's phenomenal numbers. That's actually good for those of us that are getting our licenses, because we just lost 70% of the competition.
Oh my gosh.
Suddenly in the next 2 months, all come in rushing to get their licenses renewed. So we'll see what happens.
Yeah. All right. Well, some of us think that's phenomenal. Some of us think that that's not a great sign. So regardless, get yours done so you're not scrambling at the last minute. So let's just dive into it, shall we? Tricia, thank you so much for joining us today.
Thank you. And I've told people that at NAM this weekend. I think we're shaking the tree right now. And I think it's a good thing that some people are not renewing. We are in a market where you have to be educated and informed. It's no longer you're just selling rate, you're solving problems.
That's right. And that really was, we were all at the NAM conference this weekend. And that really was the overarching tone and message. And the feedback from the participants was, it was the people who were there because they were upping their game. They wanted to learn something. It wasn't just a big, humongous Las Vegas party. I mean, of course, there's the usual stuff going on. But for the most part, the focus was on, what do I do for my business? How do I grow in this market? How am I going to be viable going forward, right?
Absolutely. That's good.
I do think that, and I think a lot of people were looking for solutions. I mean, I've done this since 1989. So I've been through all the cycles. I started in construction financing for home builders. So what I tell people is, you have went through a great opportunity the last 36 months of refis, and then refis again, and sometimes a third time. Now you need to sharpen up your craft, and you didn't need to decide what you liked best of what you did. And you need to get education in that. There were times I'm a HUD approved grant writer. I went to grant writing classes. HUD has an amazing amount of education available on their site. NMLS has a bunch of stuff. It's not just sharpening up your sales tools, it's sharpening up your knowledge. And so what you're coming into the equation with is what people are looking for. We still have a 40 or 50% divorce rate. So someone's getting the house and you're going to be getting another loan. I mean, there's certain things. Two loans sometimes. Yeah. And that's what I'm saying. I mean, as an example, borrowers that were looking this weekend, they were still not getting the bid. I mean, no one's overbidding, but I'm telling you, properties are still, I checked MLS this morning in Orange County, and South Orange County, if it's priced below $1.1 million, it's running about 28 days. That's not a recession type indicator.
No, not at all. And nationally, as of a week ago, days on the market was like 16 days, which is, those are low numbers. And
Yeah,
so
45 is more average.
we should all be talking to our realtors. And if your realtor is not feeling good about things, you should probably look for some other realtors too, because there are realtors who are busy. It is one thing to acknowledge that the market has changed and things are different, et cetera, et cetera. But there are very successful realtors and mortgage loan originators out there right now. And you've got to have the right attitude and the right take on this.
Well, my thing is, you shouldn't just be talking to your realtors. If you got your business the last 36 months through realtors or internet marketing, you need to add 2 additional channels. And sometimes you need to put the work in, and you need to join organizations that align with you. If you're Hispanic or you're Black or Chinese, you might want to go to groups that support that, because you bring something to that community that might not be there. Also, you want to, some of our grittier loan officers, you can call on bail bondsmen. Bail bondsmen do not like holding the note to a lien. You can do a refi on that and he gets paid. Call on bail bondsmen, call on hard money guys. I have loan officers that I say, hey, you need to call on bail bondsmen because they're looking for you anyway.
Never thought of bail bonds.
Call on bail. Okay, literally in 33 years of doing this, I've never heard it. Okay, so hang on. So let's back up just for a second with Tricia James, shall we? Because there's a lot there. One of my favorite things about Tricia, other than I just love her, is that typically I am I'm the big mouth in the room. I am the one that, like, you never know what'll come out of my mouth. She makes me look like an innocent little angel with wings and a halo. Okay, so just hang on, guys. So with that, let's just talk for a minute about what you have done in your career, because it is extensive and interesting. And also we might want to trade, follow a little bit of your roots for the James name. So let's start with your career.
Yeah, when I got Mr. James. Okay.
Right. So we're going to do it quickly, okay? You started in 1989 doing what?
I interned while I was at Arizona State with IBM and GMAC Finance.
Okay, then what?
And then from GMAC, I went to work for their builder division, which was Hearthstone. And I worked for Catherine Thompson and other home builders, which reminds me, Bob Toll from Toll Brothers died Friday. And Bob Toll, he is the founder of Toll Brothers. He was like a third father to me. My husband and I, he gave us our condo for our honeymoon, or our, he was just so inspiring. When I went into construction financing, there were no women. I liked it. The job that I interned with, when I interned with IBM, it was, we figure 1989, I was making $160,000 as a junior in college.
Wow.
And the IBM thought for sure I was taking the job. And I said, no, I'm going to go with GMAC. And they're like, that's a straight commission job. It was like $48,000 plus commission. I'm like, yeah, but I can make so much. And people were like, why would you do that? I'm living in Tempe, Arizona. If you knew what IBM was like, you literally went in a room and the whole back wall and all the surrounding walls were the computer.
Right.
So
we've only seen pictures, but right.
No, I lived it.
Yeah, exactly.
And so it was just a very interesting time. I loved it. And so from GMAC, I went out on my own after that and did independent work. And then I went to work for Darren Judas's dad with Ames Home Loan.
All right. And then what?
And then from Ames, I went to, who did I go to? Oh, I went to
go through the whole thing. We can
North American Mortgage, which actually probably one of my favorite jobs because it was dime savings out of Ohio. And I just loved all the people I worked with. Unfortunately, they were sold to WAMU, who then went bankrupt. Then Angela Mazzullo came knocking, and I got my job with Angela Mazzullo.
And what was your job there, Tricia James?
I started out as an AE. I became an area sales manager, then a divisional sales manager, and a trustee. I went to law school while I was at GMAC, graduated from Chapman. And, the rest is the one thing I love about Angelo Mazzullo, he told me, you can make $1 million at what you do. I'm like, there's no way I can make $1 million. You know, this is I think it was, just say 1999. I'm like, how am I going to make $1 million when my average loan amount for the Inland Empire in Orange County is like 218? And he's like, I know you can do it. So I'm like, okay, so that's $81,000 a month. So I'm like backing into what I needed to do. And 16 months later, I made $1.4 million with Countrywide.
Wait. I want to really highlight this with loan amounts at what? 218 was the average loan amount?
Correct.
Okay. So I find this interesting. And the only, I find the reason I'm dragging her through some of her past is because she has such a varied experience, that she has such varied experiences within the mortgage industry, but it has all led to now, and her time with Countrywide and being the trustee for Countrywide and going through all of that and the unpacking of that entire situation has given her a lot of insight, a lot of she's just gone through, she's experienced a lot. So that's why I'm bringing this up. So you were at Countrywide and you've done numerous things since then. But again, her experience has been varied and is really interesting.
Well, the part I like to share with people, I was a survivor. And so I changed, we're in the same time where people really need to sit down, you need to renew your NMLS and then decide, what are you going to do with the knowledge that you've gained the last 3 years? Okay, you might not be an originator anymore, but you might be in another facet of mortgage lending.
Right.
I mean, you guys thought it was so funny to do bail bonds, how that came up. I was sitting in the paper, reading the paper one day and I saw the arrests. I thought, well, shit, they had to post $50,000 bail. And I'm like adding that up and they said most of them put their house. I'm like, hey, I'm going to contact. So I drove to Santa Ana, knocked on this bail bonds door on a Sunday and said, hey, I just read in the paper that you do bail bonds for people. He goes, why? Were you arrested? Did you have a family member? I said, no, I do loans. And you don't want to hold the paper on those houses, do you? He goes, no. I said, well, great. I can do the loan if you put the lien on there for 12 months and they make payments, and then I can do the loan. He goes, great, because I don't want to do it for 12 months. I said, so say someone's convicted of murder. How much money are we looking at? You know, and he was telling
back then, yeah.
Wow.
Loan amounts back then, but I bet there's have large bails now.
Well, it was great because in Newport Beach, for example, it would be like, I got all the, Dennis Rodman, for example, I got all these wonderful athletes that would get a DUI or something like that. They'd have to post a property and, you know, the property was good. And the bail bondsman sometimes would even call me because he's like, hey, I can't go that high. How quick can you do a loan? How quick can you do an equity line? And we'd be like, I don't know, 10 days. He goes, all right, I'll throw them in rehab. Will you get the loan done? And they would, I had attorneys calling me and everything else. And I had one of my better years. And I tell people that. I used to read the paper and look for association liens. Okay, so you're liening this guy. Okay, he's going to need a loan. And what I'm saying to you is people aren't going to call you. And I never liked the people that said, what's your lowest rate? You know, what's this? The reason is I'm not an order taker. I'm a problem solver. And you make the best return on my time and my money was solving people's problems. People were thanking me if they got out of jail or they got out of rehab or they got out of something. Everybody was happy. And there, you know, I didn't see a problem with it. So that even fast forward to when I met my husband. My husband laughs because I met Mr. James in 1998. And I said to him, hey, my days off are like Tuesday, Wednesdays, not Saturday, Sunday. So I said, I only date on these certain days because it affects my income. And he goes, what are you talking about? And he goes, well, I'm a fireman, so I work. I said, that's perfect because you're gone and you won't be bugging me to do something when I have to work. And
oh my God, that's an entirely different approach to dating, which is don't bother me when I'm working. I love it. Okay, keep going.
Oh, because back then we were on the pager system, you know, and I had the big chunky cell phone in my car, you know, we all.
Yeah, those were attractive. Really
yeah,
fun.
They really were. And so it was perfect for me because usually I didn't date in the construction industry. I didn't swim in the pond that I was working in, is how I put it. I thought it was very important, or I said I would, you know, splash around in there, but not close the deal. And the reason is, the reason you do that is that would affect my income.
Okay, so what I'm hearing from you is that from the very beginning, it was all about your income, all about your income. Tricia and I laugh because we have these conversations where she's all about the income, she's all about making the money, and I'm all about, oh my God, that felt so good. I just signed docs with these people. I walk away exhilarated because I just changed someone's life for the better. And she's laughing at me and I'm looking at her like, what the hell's wrong with you? And so I told her, I said, maybe we've been brought together so that we could at least peek into the other, because we're on extreme ends of the spectrum, I think. And maybe there's
I feel good when I make
ground.
275 on a loan. That's what I feel good about. I don't feel, I mean, when she says, I felt good, I got someone in a house. Okay, you did. That's a great thing if someone got down payment assistance. But the reality is you feel a lot better if you made 2.75 and you got someone in a house.
That's right. And I never ever paid attention to that, which, you know, in retrospect may have been a little stupid on my part. So again, I think that these glimpses into the minds and workings of other people is very important. But I love how you think outside of the box and always have. So again, the bail bonds thing, that literally would have never occurred to me. Not once, ever, ever, ever. And I don't think I'm alone in this, but I have recently joined a group where there are a lot of attorneys. And so that's a whole different group of people. And the motivation for their clients to do any sort of transaction is going to be different than, say, a realtor, right? A lot of times. Not always, but a lot of times.
Yep.
One of the best places I advertised when I was a retail loan officer was on the back of the church bulletin. And people would say to me, you go to that church? No, I subscribe.
Yeah. Do you want to hear? Okay, you want to hear an interesting thing about that, actually? And I think I've mentioned it before in a conversation with a compliance person. She goes, if I were to advise someone as you're trying to tackle this whole fair housing, and are you trying to reach more people in different
this is really cool. This is interesting.
Yeah, she said, just put an ad in every church bulletin in a 20-mile radius, and that should cover you, because then you are reaching out to everyone, right? And I mean, I don't know how many churches there are. I'm going to imagine there are like a zillion. And where do we draw the line? Are we doing Scientology? Are we doing, but the point is, get yourself out there, and maybe that's an affordable way to do it.
Well, what I found very interesting, it was always men texting me in church, because they're sitting there on the bulletin. Hey, I'm sure I can't talk right now, but what about this? And it would be either on
your picture on your ad in the bulletin. That's what I want to know.
Yeah, it is. It was, well, and actually it was probably back then, I guess we did, I was skinny and attractive, it was trying to close the deal, I guess.
Oh my gosh.
And so anyway, so yes. And what I would tell people is your best bet to making money is to connect with people in the community that you know. So whether that be if you hang out in strip bars and you hang out at clubs and stuff like that, that's great. But make sure you know how to do gig loans, and make sure you know how to do subprime loans, and you know how to do non-QM loans, because those people are going to be bank statements. If you go to the beach and stuff like that, I mean,
you surf.
Yes, that's what I'm saying. We have spent the last 2 years literally locked down, or, everybody had to be remote, everybody had to be this. What people have to step back and do is, there are loans out there. There's not going to be the refis and stuff that the people were looking for you, but they're looking for someone to identify with, to sit down with and have that conversation. And they might want work done on their house. They might want to move to a different house. A lot of people, for health reasons, now want single-story homes, or I need a smaller home, I need to downsize. They've spent a lot of time in their homes, so they know what they need to do.
Right. Well, I find there's a big disconnect. We were at this event last week in San Francisco, and there was one of our state assembly people or senators was speaking, and he was talking about, they pick a trajectory in terms of what they think the focus for housing should be, and they don't get off of it ever, because it doesn't fit their narrative once they've figured out what their narrative is. So this idea that, they're building this high density housing, that's the focus. We're going to turn shopping malls into housing. We're going to build all these high rises. We're forcing all the cities to create, condo situations, when all of the data that we're reading is pointing to the people who are buying houses right now, millennials mostly, want yards and houses for their families. And so this idea that they are pushing this certain type of housing when the need is actually for something different frustrates me big time. Frustrates.
But if you think about that, we went through this in 2000, I think 10, where they took all these commercial buildings and turned them into lofts because no one, and so you saw this industrial, people were buying lofts. How many people still live in those?
I don't know how many, Tricia.
They're not owner occupied. That's the thing. So many of them within a 36 to 48 month period, they ended up being investment properties. And people would say, because I couldn't go out, there were no grocery stores. I felt like I was still at work all the time. There was a lot of things that people didn't like. Interesting when you say people want a backyard, the data's not in on this, and I think this is going to be an interesting conversation. For California example, all these people cashed out and they bought in Oklahoma, Texas, Arizona, Nevada. Florida. Okay. So you took this equity, you bought this house. Well, guess what? You did that off of California wages. Now that mortgage companies and other industries are starting to cut back, out of sight, out of mind, the person I'm going to probably get rid of is the person that I don't see. That's the easiest.
The data is supporting that. Actually, it's happening. That's the deal. I really think at this point you should introduce your business partner that is sitting next to you, because we keep seeing his cute little head.
This is Ranger. He's people that know me, I had German Shepherds always. He was a PTSD dog, and his soldier killed himself this past February.
Ugh.
And so I had never had a giant schnauzer before, and he's stronger and more determined than any German Shepherd. I've had 32 years of German Shepherds. I trained for Wounded Warrior, and this one's harder than any Shepherd I ever had, but I love it because he has hair and he doesn't shed. And I've worn German Shepherd hair for how many years?
Oh, shed. He doesn't shed. Got it. Okay. So, it is all right. So we're talking housing. We are talking about different kinds of loans that can be done. So let's talk for a minute about.
Actually, before you go that direction, I want to just talk about something that Tricia was talking about. Back in the '80s when she was, going to bailman's office, and what kind of rates you were talking about back then.
Oh,
you were still.
They didn't even care.
Right?
No, back then you're doing a bail bonds rate or something like that. I didn't.
Wait, hang on your microphone, honey. We can't hear you as well.
Okay, I'm sorry. On a bail, I didn't know this. Like on bail bonds, they charge like 5 points and it's 14%. So back then I was doing, I think I was 8.5 or 9% back then. And I'd be like, I'd go back at the Fannie Mae rate sheet, you go 8.5. We didn't have COVID and all that stuff. I'd be like, we're going the max and I'm getting the max pump and you're taking the loan. And they'd be like, I don't care. My brother's in prison,
yeah,
or my brother's in jail, or my brother needs, for whatever reason. I mean, my busiest month was January. Everybody that got a DUI for New Year's or that wanted to leave their wife. I was like,
oh my gosh. Interesting.
January and February were like ka-ching, ka-ching. And I told people,
so, well, and now see, this gives people an idea for first quarter this year, because a lot of times January is a little bit dead, right? And now we know how to not make it dead. We're going to go after the drunks and the divorcees and divorcees, right?
Well, you have a whole new category now because you have drug addiction, and you have drug addiction now. People want to fix things instead of, pay a fine and go to Now people want to fix a problem, or people will identify, I was going through a mental health crisis, or I was going through this. And you're like, oh, okay. So we'll throw money at the problem, and they'll get their parents who have tons of equity right now and say, Mom, I need $100,000 to go to rehab. And they will go to rehab.
Right. Wow.
And so when you say, oh my gosh, you're going to do loans for that, guess what? If they get the loan through the third-party companies where they're not linked to a mortgage, they're anywhere from 15 to 23%.
Right.
Wow.
Right. Well, and just again, look at what everyone's HELOC is doing every time the feds raise, look at what the credit cards are doing, et cetera. Jill had a good point here. She referenced an article, which I had read too. She said that the CEOs, they did a survey of CEOs, and of those CEOs surveyed, 80% of them think that there's a recession coming within the next year. But they're also talking about how, and this is something that just is human, that the people who are in the office that are next to their bosses know them better. They're going to be kept before somebody who is remote. They don't know them. They don't want to turn their camera on during a meeting, et cetera.
Especially the ones that are doing two jobs at the same time.
Yeah, that's another thing. Holy moly, right?
Oh, I have a joke to that. I call that a Bonnie, because I worked with this lady for years that Bonnie would work at two companies at the same time, and she was an AE, and I would laugh. So now when someone does that, for the last 2 decades, I've called it a Bonnie, and everybody just laughs. There's AEs that do it. There's loan officers that do it. I mean, I joked, I had AEs under me. I said, it sounds like you're driving for Uber. And they're like, no, I'm not driving for Uber. I said, there's someone in your back seat. I hear you. And
I know. Well, there are a million ways to figure that kind of thing out at this point. Bottom line is jack of all trades, master of none, as my grandparents used to say, right? So focus on your job and do it, right?
Yeah.
So
I did want to share something here, and it's when we were talking about rates in the 80s. So
oh my gosh,
we got this yesterday. I shared it with both of you guys. Let me just do this real quick.
Yeah, this came from a manager in our office who I think got it from somewhere else, and it's amazing.
No, I believe it was his own rate sheet.
Take a screenshot of this, guys, and anytime
this is from 1982, and these are the rates. Now, a really interesting thing is only 3 of these banks are still in existence that I can tell. Maybe
Civic's still there, but now Tesser runs it. Bill Tesser's running that. Advanced Mortgage was one of my exes.
Oh, really?
Yeah.
That's funny.
That's really funny. But I think, so
look at these rates.
Yeah.
17%, 16%.
He was a gambler too, if I tell you the truth. He went to Vegas all the time. I mean, he made bank, I'm telling you. He was, and he named his company Advanced so he'd be the top at the lender list.
Oh my God, that's really
funny.
Oh my gosh, if you're going to start a company, make your company start with an A. That's so funny.
No, make it sound with that. Now when we're use number signs. So if you use a character, you're ahead of the alphabet.
Ah, see, there you go. Well, okay, so there's a few things that are telling on here. A, rates are not the issue. Rates have been higher. And again, like I know that the loan amounts on here were like, what, 250 to 500 or something like that. But still, the point is,
you were solving a problem.
Maximum $250,000, maximum $500,000. Yeah, so they no.
But again, our whole point is you were solving a problem. So people didn't care if it was 15, 16%. You were getting them in a home. You were either relocating them, you were putting them in a home, you were putting them in schools, they needed to move, they needed to be in a single-story house, they needed to put their brother in rehab. You solved a problem.
The other thing too is don't get caught up in the hype and the hysteria around companies going away, because look what happens. These companies were there and now they're not, but they're replaced by other companies, and we're seeing that a lot. We saw that this weekend at NAM. There are a lot of new companies. I talked to people who are just
a bunch of new companies
in the industry. I mean, in the last less than a year. So I think that's fascinating because again, it's a reminder to stay focused on your business and don't get caught up in the hysteria of, oh my God, the sky is falling. The rates are too high. The lenders are all going away. They're not all going away. Some are going to go away. Some are going to stay. They will be replaced. It's going to be fine, people. It'll be fine.
It'll be fine if you prepare for it. And that's what I'm giving. And so if you're sitting at home and you're saying, my phone's not ringing and I have no loans, then go get a gig worker job, because you're going to meet someone that's working a job that wants to buy a house. Okay. So you need to do something other than commiserate.
Right. But the whole, we talked about that a lot too. We've talked about that. You have to get out of your house. You cannot sit there, wait for the phone to ring anymore. And frankly, the email stuff, I mean, everyone can do email. It doesn't mean anything until somebody knows you and loves you or likes you or whatever your deal is. I mean, Tricia doesn't care if they love her. I do.
I could get up every day and I don't care if one person, I'm not validated by someone else's opinion.
No, not even
We
a little
know.
bit. It's so healthy. I like just rub next against her. I'm like, okay, I need a little more of that because it's healthy. But then, anyway, point being, get up and get out. Get out. We've said this from lockdown. You have to get up in the morning, you have to take a shower, put on something that doesn't stretch, and go meet some people in person.
Wear a shirt that says brokers are better, or I'm a this or whatever. I think you need to, like I tell people, I get up every day because I have a purpose. Okay. And my purpose is I want to make more money. We know that. And so if you say January's bail bonds and divorce month because of Valentine's Day in February, and March we have, the residual from divorce, but you have the guys that bet on the Sweet 16 and they lose their ass. So you have the gamblers that you're going to be doing. Then you get people that want to pay for the summer vacation in April and May. By the time June comes, people got to find a new school and new house and divorce for their, I can get the whole year. I mean, you just need to realize you got to map out your success. And it's not, no one's going to do it for you.
No.
And it's not so simple as just going out and, having a cocktail with a realtor, because who knows if they're commiserating with you and saying, hey, there's no business out there.
Right.
Stop by an open house. I mean, if you're driving and you're stuck in traffic on Waze, get off the freeway and stop at an open house or stop at a real estate office. Ask to use the bathroom. Say hi. I do loans for a living. I mean, it's not, we joke about that because I used to drive through the Cajon Pass and I said, my best brokers were there. They had the best bathroom. I didn't want to go to McDonald's and I could pull off at Kenwood and they had a nice little bathroom there. And they go, how'd you know them? I said, I came in one time and said I needed a clean bathroom and I do loans. We can be friends. And they just laughed from there.
Oh my gosh.
I'm just saying, your value. And if you're someone that, and it's for anybody, you might have been a great person on the phone, came from a call center, and now you're going to work where you got to generate your own business. And you say, I just can't do this. I have no loans in my pipeline. No, you just won't do this. You need to do this. If you want to continue what you like to do, then we got to figure out how you're going to do it. And I take my top 3 skills, write them on a piece of paper. And if my skill is that I like to talk to people, I like to tell them I'm a loan officer, I like to close loans, then guess what? I need to be out somewhere where I can introduce that to people. If that's delivering groceries, if that's being the tip taker at a nightclub, being security at a nightclub, I don't care. Do the gig to get you to what you need to be. Park cars at the Marriott. I don't care. I know a guy that was a valet parker and one of the best loan officers I ever knew. He worked 20 years. And I said, he goes, every person I get, it's from there. I mean, car loans right now, you're going to be at 8.5% on a car loan. My best friend would be the F&I manager at you might not be able to get a car lease or they want to buy the car. Start calling them saying, hey, I do mortgages, I do equity lines, I do this. Everything is an opportunity for you and it's what you make of it. And people need to stop playing victim or there's no loans out there. The rates are too high. I mean, people come up with a million excuses. Guess what? Well, someone's getting a loan and our economy is going to continue. You're just not going to be part of it.
Exactly. Look at how many closed transactions have happened in your county in the last month or 6 months. There are deals closing. You're just not doing it. So go get them, right?
Absolutely.
Correct. Yeah. And the other thing is, okay, short-term rentals. What did they say in Riverside County? The short-term rental bookings are down over 60% because the price of gas and stuff like that. It's time to have conversations with those people. Why don't we refi you, put you on a 40-year IO? Why don't we improve your cash flow till the market changes? Maybe they want to turn it into a permanent rental. Maybe they want to take cash out and turn it. So there is opportunity there. And they're like, well, I know they don't want to do anything because they have this. Or no, you don't know. You're creating conversations in your head because you're not out having them.
That's right. Exactly. And again, it's easy to make excuses. So get out, get up, get out. And if you need to have some feedback and conversations help. Again, we can have a conversation about you and your business and we can come up with some ideas that are different. Well, you forget it.
They shouldn't call me because when they call me and say, I have no loans in my pipe. What do you think I should do? I said, being that you're calling me, you should probably go get a damn job, because I didn't think you were that good at it to begin with. And
That's right.
you know,
She will tell you. She
Yeah.
will 100% tell you. I'll say it nicely. She'll bluntly like slap you in the face with it, but the message is important and we need to hear that. And if it takes a slap, that's what it takes. It's good. Can I just, I'm wanting to go back to a question we had earlier from Tom. He was asking about whether or not we should be worrying about continuity of income if somebody's going to go to jail. Let's say you're going after these.
Well, you can always do the loan against investment properties. So it's not an issue.
No.
Okay. All right.
And you have another opportunity. You, back in the day, I couldn't loan in every state that didn't, you can do DSCR in states that don't require a license through particular lenders. You need to partner with lenders that know product, they know your market, and they're going to give you the material to learn it. Am I going to read the matrix to you? No. I'm going to send you the matrix and say, listen, you need to make sure your borrower fits into this, and don't lie to me and say it does.
Right.
And it doesn't.
Right.
I mean, I met a guy in Texas, your friend in Texas, and he says, oh, I'm in Austin. I said, I-10 financing is huge in Texas.
I remember that conversation.
Greenbox does 85% full doc I-10 all day long. Raymond has kept that product around for 20 years. They're known for it. And when people say, well, they don't have the money to put down, well, tell them what they need to do, and I guarantee they'll get it. You know what I'm saying? They have money in the wall. They have money in, grandma's garage.
Yeah.
So what you need to do is to realize, hey, this is what's in my backyard. I need to find a way to solve these people's problems. If it is, cash flow on investment properties, if it's I-10, if it's bank statement programs, you have 3, 6, 12-month and 24-month bank statements. People say, oh, on a 3-month, I had a broker today, he said, you need a 12-month P&L on a 3-month bank statement? I said, yes, I do. And he goes, well, why would you need that? I said, because the 3 months shows that they're making the money, so I pass the ability to repay, but I got to show an income history, so you need to get me a P&L to support that. He goes, oh, I never thought of it that way. Okay, we are in this to make loans that can deliver to Wall Street. So the first thing with the CFPB, did you have?
You're there.
Okay. No, I thought someone was asking a question. I'm sorry. So when you do those loans, there's an accountability factor. We want to make sure they have the ability to repay. We want to make sure that what we're doing right now for this person is solving the problem, and we're delivering on a loan that fits in the parameters that can be securitized.
Absolutely. And that is, we've talked about this. The number one thing, you would think the number one thing would be, are they going to pay the money back? No. Are we satisfying the ability to replay? Can they sell it on the secondary market? Done. That's it. Right. And so again, we bring as loan officers, some of us have been so wired for so long to be concerned about rate, cost. And we get dragged into those conversations. And I've told the regulators, I'm like, you perpetuate this, and it's a problem because people are so fixated on what is my rate that they lose track of, can I afford the payment? Is this going to help my family? Is this going to help me achieve what I need to achieve? And we have to control the narrative, or at least help frame the narrative so that it's something that is productive and healthy. And so, can you afford this house? Do you need a place to stay? Do you want to know that your payment is going to be fixed and stable for the foreseeable future instead of having a 14% rent increase, year over year or whatever?
I mean, I-10 or foreign national, for God's sakes, you're giving them the American dream. I don't care what the rate is. They came to this country with Uncle Chewy's social, got a job, saved the money, and now they're buying the American dream. So
exactly,
we're fulfilling everything the country promised them.
So I don't have to embrace that first. We have to be on board with that idea and not be so fixated in, oh my God, they're not getting 3%. Holy crap. Kevin, what were you going to say?
I was going to say I had a client last week with a smaller loan, and she was talking to First Republic, which is offering some ridiculously low rate if you deposit money with them. And she goes, what do you think? And I go, well, you'd have to put your money in there and not earn interest. So you're going to lose out on the interest, and it's probably going to cost you more of the savings. But the other thing is, you don't get to work with me. And she goes, oh, okay. And then she just went, we're still doing the loan. It was that it. It was that
Because you
simple.
knew your value to the problem.
Yeah.
And that's what I'm
Uh-huh.
saying to you. So that when I say to put down your 3 things, know your value, know your worth. I mean, I
Right.
tell some loan officers, you absolutely suck at this. And so you need to go back and pick one product and get good at it. And so you're known as that person. Because you don't seem to know math, you don't seem to do what I tell you, and we close these loans painstakingly because I have to scream at you 4 times a day.
Yeah.
And so we need to make it simple, and you need to start with a DSCR, and you learn how to take a DSCR loan, and then you go get DSCR loans.
Yeah.
And when you get good at it, then we'll expand your horizon. But you
start going to the apartment association meetings, and there's a whole bunch of people in there that would love to hear that. Wait, I can refinance my 5-unit or 6-unit apartment building into a 30-year fix. Are you kidding me? I don't have to deal with Chase and have to renew it or prepay all the time. And
well, the other thing, cryptocurrency and the marijuana industry, we now do loans for those people. I mean, that was like so taboo. I mean, I have a father that's an engineer at Purdue. He was a father of the 60s, smartest man around, but he couldn't wait till they legalized marijuana. He's an engineering professor at Purdue, and he decides to open up a marijuana industry thing as soon as Colorado legalized it. And it was like his nirvana. He felt like he was Jesus. And I was like, are you kidding me? I said, you're German, for God's sake. You don't cultivate drugs. And he goes, no, I knew that it would solve so many problems. And you know what? There's so many things that are right now. You have the solar industry there's money. I mean, people are going to go solar. People need electricity because they have to buy those cars. So they're going to be home improvements to their house to buy that solar. You have DSCR. Those people are going to want to put solar on because the utility rates we just talked about, oil, gas, all those things are going up exponentially. So why not get a fixed price where you can put solar on and you can control your rate of return? So don't talk to me about you want a 6% rate. Why don't we control your electric for a while too?
Right. And again, rate, forget about it. What are your expenses? What are we paying? What is your overall, what can you afford? Right. Holy crap. And by the way, just for the record, do not get all hoity-toity about the Germans and not having drugs, because again, I just read Blitzed, which talks about the drugs that fueled the Third Reich. So that's a whole different conversation.
Hitler was not German. We've had this conversation.
I understand, but he was in charge of the German population. So there you go.
He was a little crazy about
remind us that Hitler was
helped.
Back on track.
Oh my God.
Rebecca asked about doing loans in other states. So if you do a DSCR on a 5 to 8 unit building, you can do it in almost all states, correct? No matter what state.
Correct. It's not all, but there's probably, I think last time I checked, 31 states you can do that in.
Mm-hmm.
And the opportunity she has there, usually 6 to 8 unit properties had short-term financing, meaning that it had a call date of 5-7 years.
Yep.
Now, because a lot of your residential lenders are carrying those products, you can get a 30-year fixed in those products. So there's no,
awesome.
I mean, and again, you're opening up opportunities that were not there before.
And I would just like to, Kevin and I were talking about this briefly this morning, because we're going to teach NMLS tomorrow and on Thursday and next anyway. And so there's a chapter this year in NMLS about non-QM. And it's always a crack up to me, because what is the definition of non-QM? And people are like, I don't do non-QM loans, because they're like, I don't do subprime loans. They equate them. They're the same thing. No, they're not. Anything that is not a conventional 30-year fixed is non-QM. A 15-year conventional, a 20-year conventional,
40.
a jumbo loan, an FHA loan. Those are all non-QM loans, which
is
VA, right, exactly. So it is a completely different thing. I want to quickly run through some of these things that people have posted. So someone said, I worked for First Alliance back in the 80s, and we did a lot of second trustees for bail bonds, 18.99% rates. Someone else said, my first house was financed with a wrap at 19%. First time buyers think 5 to 7% is normal. They have no other point of reference. So that's good.
They invite their grandmother into the loan appointment, because their grandmother, the house that they go to see her on Sunday, she paid 18% and paid it off.
Right, exactly. We had Cal Bay Mortgage for our Fremont condo, 14% VA loan, refinanced to 9.5%. Probably thought they had won the lottery, right? So and there's a comment here, Tricia, they love your attitude. So I too love Tricia's attitude, because she just says it like it is, which is refreshing to me. I mean, no tap dancing around this stuff. And you never know what'll fall out of her mouth. So how
and the question about whether people who are needing bail bonds to have a job going forward, it's usually not the person who's going to jail that takes out the loan. It's usually a family member.
Yeah.
And truthfully, there are, in some industries, their employers will guarantee them the job if they complete rehab, or if they, I mean.
Interesting.
Especially
Yes.
these days, right?
Yeah, that's what I'm saying. We're all about fixing things nowadays. People want to be known for, I let him go to rehab and he kept his job, and look at him. So
Wow,
they want
yeah,
that feel-good moment. Okay, so
oh my God, look at you talking about a feel
I
good
don't have
moment.
it.
I don't
I'm
even
just
know who
saying.
you are right now. Oh my
Hey,
God.
but what I'm saying to you is that feel-good moment, it benefits everybody, because
Yeah.
you're saving the person's job, you're saving a lot of things. And trust me, when they decided to get the DUI or do the coke or whatever they're going to do, they 8.5% on an interest rate was not even entering their mind.
That's right.
Don't
So
worry about it.
someone made the comment, realtors wear name tags at the grocery store, why not LOs? And then Grant said, sometimes we need a good face slapping, and that is true. Okay, so.
Well, I was in Costco and a guy heard me yelling at a broker on my phone, and he goes, I'm trying to get a loan. Do you think this is a good rate? I said, I don't work retail. And I said, did you see how I was yelling at him? I said, you're chasing me around Costco to know if 4.5 is a good rate? Of course it's a good rate. And if you have to ask someone, that's pretty bad. And my son goes, oh, that was good. He tapped my son. He goes, can I get your mom's phone number?
Some people, you know what? There are people who want the truth. There are. Some people want to be, coddled. I always tease one of my realtors. That he coddles his clients, because I'm like, dude, let me do my job. They don't need to call you to ask. You're not like a buffer, okay? So anyway, you want to be straight with them. And we've talked about that a lot. Okay, so somebody's asking, if Tricia, do you know if you close a loan in another state, if you have to file a return in that state? I know you're not a CPA, but you do have a law degree, so.
Oh, no, okay, so that's an interesting thing. Certain states, they have you fill out a W-9 to process the check for you. And so, yes, they will do a state withholding, and states like that, Illinois, they want everybody's money. Hawaii, Alaska.
Probably California.
I see, because I'm here, I don't know that much about that part, about people being out of state. But I do want to touch base on the whole crypto thing still.
Okay, crypto, let's go.
Let's go on crypto. We need to understand that the value of a dollar is shrinking. And, as soon as I say that to someone, they say, well, crypto lost so much money. I'm telling you, it lost a lot, but a certain amount of people that have disappeared from society's dollars, and they're in the crypto 100%. And there's escrow companies now that take an earnest money deposit with crypto. There's borrowers that they pay their rent with crypto through a Coinbase service. So you need to learn those programs, not just that. I don't want to, they always send me some meme, someone so lost so much money on it. Okay, you also sent me Indigenous people yesterday, and what did I say to that? I mean, it's the same thing.
I'm terrified to find out what you said to that. So maybe.
You know what I said to it? There's not, everybody I know, including the receptionist by off in the door, knows about Christopher Columbus. If there's one person that could spell Indigenous without looking, I might actually celebrate it. But there was not one person, that could spell it or could describe what an Indigenous person was. So we're not celebrating anything. We might as well celebrate happy hour at that point.
There we go. I like that.
There we go. Okay, so I want to take a moment. Let's talk about, and very briefly, because we have some listeners in Florida, but not everyone. But there is a lot going on in Florida. That the aftermath of Hurricane Ian is no joke. And so, first of all, I want to talk for a second, talking about opportunity, about the borrower who had turned his Airbnb or his place into an Airbnb during lockdown, right? How much was he making a year?
Okay, Tricia? He made $500,000. Okay, the house was worth in Miami 1.9 million. And you'll hear about the Taj Mahal toilets in a few minutes.
Yeah.
So what happened was, the loan officer sends me an appraisal. She goes, Trish, would you do this? It's in Miami. I said, okay, send me the old appraisal so I can see. And the Airbnb return was 500,000 in revenue in 2020 and 350 in 2021. And it's appraising for about 3.3 million. So then I'm looking at the appraisal and there's literally, because I said, is there any damage from the hurricane? Is there any flood damage or anything like that? He goes, no, he has a garden and it's flood protected. And I go, it's flood protected. He literally has all these toilets lined up in the backyard and there's organic plants in each bowl. And
what did they do? Hang on. What did they do with the organic plants, Tricia?
well, that's what, so they advertise for Airbnb that there's an organic garden that you're free to eat out of. He doesn't say it's all in toilet bowls. So I look at the appraisal, I said, you gotta get this shit cleaned up. We're not having the Taj Mahal of toilets up there. And she goes, but it's a $3.3 million house. And she goes, that's one of the features that people rent it for. I
The
said,
toilets.
yeah, and we will share it. Audrey has the picture. It's on my Facebook because since the hurricane, there's been so many things surfaced that people were like, hey, I need financing for. And I'm like, hey, we're getting the disaster relief things, you know, county by county, and then we're going to have to do an inspection and an appraisal. And we're going from there. And I mean, is that a great investment? His Miami house? Yes. Am I wrong to say those toilets are an eyesore? Probably. But I know what Wall Street's going to say, and not one person on Wall Street thinks someone with a backyard full of toilets is worth $3.3 million.
Right. So again, the eye is on, can we sell it on the secondary market?
Correct.
If the answer is no, it doesn't matter what else is going on, right? So
well, no, the loan officer ended up getting me on the phone with them and the borrower on yesterday, because the guy said he disagreed. I said, okay, and who did your last loan when all the toilets were there? And he says, well, I had a private party. I said, you know why? Because anyone on Wall Street, they go to the bathroom. They don't want to see the bathroom. And the guy goes, and I said, he goes, well, you don't understand. It's like an artist. I said, you know what? I'm like a black and white Wall Street type. You're right. I'm not, I'd vomit if I ate a leaf of lettuce out of the toilet bowl. It's just not happening. He goes, well, those toilets were never used. I said, I don't care. And he goes, it protected my garden from the rain. I said, okay, so you need to decide the private party loan that you have at 10.5 on 1.6 million, or my 2.1 million at 8.75, and you get rid of the toilets. I don't care. Put them in the garage, put them somewhere. Clearly, they're not attached to anything.
Okay. And just for the record, Tricia had gotten on the phone with Fish and Wildlife in Florida last year as everyone's scrambling to put together their disaster relief policies, and was told that there's this little issue in some of the flooded areas where people left their houses with the refrigerators open, and then the place is flooded, and now the alligators, crocodiles, and snakes are entering said houses to go eat the food, but also finding, you know, random living things or previously living things that were there and eating those too. So it's a horror show. And yesterday I'm in the airport flying home last night, and I'm sitting next to this guy from Tampa, and he has a friend who had a crocodile in his flooded house. It's true, Tricia, it's true.
The Fish and Game guy was telling, because I said, hey, when can I get that 442 in? And I said, I need a certificate of occupancy. He goes, we're not even entering those areas yet because of the refrigerators. And he goes, we don't know if it's bodies. There's just alligators. It's not safe for anybody. I'm like, oh my God, that's, you know, I didn't even think of that. Being out here, I did not understand that whole thing.
Yeah, no, there was a story about an appraiser who had to walk for like
45 minutes
to get to the property.
That's right.
There's no road access.
No, it's not just, is the property standing? Is there infrastructure? Is there a road that leads there? Are the utilities on? Is the condo, you know, basement flooded? And we don't know whether there's any structural integrity, and they can't get there to check that out for the next 9 months. Like it's crazy there,
So
isn't it?
that's
Some
why
of these
you're
fires are
seeing,
so much better.
well, no, but when you're hearing like the mortgage applications are down 37% last week and stuff like that, those are all things that are being impacted by Florida. You have to remember, Florida is its own economy of lending. And I don't know statistically, it's probably in the top 10 in mortgage loans. And you really have nothing going on there right now. People can't access stuff. So I do think, and that's where I thought the unemployment claims would be higher because I thought the people in Florida would be applying for unemployment.
But I think the point is they can't even get there yet. That's what we're hearing. And so it is a whole different world there right now. I just want to take a quick moment and talk about, we heard from the Deputy Commissioner of FHA on this weekend. And I talked to her again. She agreed she's going to come on our show. I just need to contact her probably tomorrow. But the things that FHA is looking at right now that are a priority is they are looking at the mortgage insurance premium. Lowering them is a priority. They're really looking at that. They're reconsidering MI life of loan. That should go away. But I thought one of the really interesting takeaways, and I know Kevin agreed, 40% of FHA loans involve down payment assistance. I had no idea that number was so high. Did you?
I had no idea either.
And the fact that lenders don't make money when they're doing down payment assistance, like it's usually a loss, it is like, how's that work?
Well, you're the one that said you feel good that you got him in a house. I said,
You know what? Shut up. Okay, yeah, I feel good that I got him in a house,
You
but
said it was not about the money that you like down payment. I'm like, okay.
But I mean, I'm not stupid. I understand that businesses have to make money. Like that's like, you know, so I find that fascinating that this.
I got a thing yesterday from a realtor. One of my clients was looking at a particular property and she shared that property with me, and I have to use some service. I don't remember what the service was. So it knew that I had logged in to see the property my client is looking at. And then I immediately get a list of all the down payment assistance programs in the area that are possible on that loan. On this, and I quickly looked at one. It was in Walnut Creek. So I looked at the Walnut Creek, thing. And it's where Walnut Creek will have a percentage of ownership in the property. Like, you don't want that. Like, no, don't do that. Yeah, they'll give you.
But maybe they do. Okay, if you have no ability to buy a house and that's your only way to buy a house, then maybe that is what needs to happen. What I'm saying to you is, I think the down payment programs are good. I think they're good for some people. What I had a problem with, because I was sitting at the same table when she wanted to expand it, that 50% of all FHA mortgages are now going to be down payment assistance. And I said, well, that's going to take even more lenders out of the equation, because some lenders like Glenn Stearns built his house of lending based on FHA and VA loans. And if you are doing FHA loans and you're not making enough to service the loans, because you're going to feel good like Audrey that you got them in the house and get a Christmas card from them, that's great. But the bottom line is to keep the doors open and to service it and stuff like that. I think 50% is kind of scary, that 50% of the money or 50% of the people looking for a house right now are looking for someone else to put the down payment.
Mm-hmm.
I mean, Wall Street's looking for skin in the game and everything else. What's going to happen?
If you can't come up with the 2% or 3% that you need to, because you can do Cal Hathaway with 2.5% or 2% down. Yeah. I mean, if you can't come up with that, how are you going to deal with when the roof blows off and the insurance doesn't cover the whole thing? Or you have to be able to have some money set aside in life. You just have to.
Well, it's not even the roof; those are major things. I'm talking even a refrigerator nowadays, $2,500 or $3,000.
Crazy. Okay. We blew through this hour so fast. It's mind-boggling. That's Kevin and I, it's our favorite guests are the ones where we look at the clock. We're like, holy guacamole, it's over. So we're at the top of the hour. We are done. Guys, it is a busy week.
Never got into gestation loans or anything else.
Oh my gosh, right? Okay, next week, Kevin, we're going to talk about.
Yeah, well, next week it'll be appropriate because by then the news will have broken. And we can talk about it versus now we can't talk about it because we know the players and we don't want to badmouth a particular player until we know for sure, they're in trouble. So,
but again, we've got CPI this week. We've got, Fed. There's so much going on. So make sure you don't take your eye off the ball. Make sure you're locking your loans and being really clear with your borrowers about have them be part of your solution. Make sure you're not trying to shield them from any pain. Let them know what's coming up. Make sure you're really direct and clear about it. And we will look forward to seeing you next Tuesday.
You get the lock in before that CPI number.
And thanks for having me.
Tricia, we love you so much. We'll look forward to having you back on. People love your directness. Well, I mean, anyway, there you go. Mwah. We love you very much. Thank you so much. Have a great week, everyone. And keep your eye on the ball. Go get some new referral sources. Kisses. Bye.
Bye-bye.
Bye, guys.